Hey, welcome to Dallas Stock Talk, where I talk about topics relating to finance and investing, but more specifically the stock market. In this video, I'll be going over whether you should buy Shopify's dip. Shopify has been taking a major hit lately, but before we buy the dip, we're going to do a stock analysis. We're going to be going over the company's overview, key highlights, news, financials, technical and fundamental analysis, risk factors. I'll give you my personal insight and whether I think Shopify is a buy. But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know that's quality content and help my videos reach a broader audience. So a lot have happened with this stock, and by the way, this video can be a little longer than usual, so I created timestamps so you can skip around to your liking. Now Shopify, the stock price is about $729. This is actually real time. This video will come out tomorrow, but like I said, so it's taking a major hit. Let's just see, in the past 5 days down 21%, the past month 29%, past 3 months 55%, and year to date 46%. So this stock has taken a major hit. Now a lot of people have the approach of buy the dip, but we're going to look at, should we buy the dip from the evaluation or the value of Shopify stock versus now and the future growth, as well as the cash flow. And don't forget, we will look at technical indicators just to get an idea of where the price can go based off of previous price action. Before we get into the news of why Shopify has been down, I'm going to go over a company overview. So Shopify is a platform that allows millions of people to create their own store within, I want to say, less than a day. So it gives them the website, it allows them to process payments, it gives them everything you can think of to start an online store. Shopify does it for you. I really like that kind of model because as business grow, Shopify can grow as well. And I really do like this company, but I'm trying to find a good price point relative to the risk reward. Now, what happened to Shopify? So Shopify, because of the pandemic, they have seen huge growth in revenue and earnings, and it won't grow as fast as during the pandemic. Because of the e-commerce and online stores and stuff and the stimulus check, we've seen a lot of growth from Shopify as far as people buying things online. But now things are starting to shift because of rising inflation. Customers may be spending less online. So these are key big news that are kind of driving Shopify stock down. But it's also good to mention that in the short term, a lot of stocks is driven by news and current events, which is kind of hard to predict. That's why I normally try to focus on it from a long-term perspective. Now, when I say long-term, I'm looking at 5 years, because then I can focus on how the business is doing, and I'm expecting the share price to reflect how the business is growing over a long period of time. Now let's see how Shopify makes money. Now this is from 2008, so the percentages has slightly changed. Now they make money two ways: from subscriptions. The other one is the merchant solution, which you kind of think about it as almost like fintech, processing payments, transaction fees, providing capital for small business, and also being able to get your products in physical stores. Now, as of now, this is the merchants is more like 70%, and the subscriptions is 30%, but this is from 2008. But I like to give people visuals so they can kind of see what the breakdown looks as a chart. Now let's go over briefly Shopify's mission. Our mission is to make commerce better for everyone. We believe that we can help merchants of nearly all sizes, inspiring entrepreneurs to large enterprises. Now let's scroll down. These are the plans that I was saying: the basic Shopify, Shopify, and advanced Shopify. So a lot of the merchant solutions and all that stuff will come more so in the advanced Shopify and the Shopify. But the basic model allows you, it's just the basics to start up a business, and then the Shopify is everything to grow the business, and then you have the advanced features. As we can see for Shopify, it has 1.75 million merchants that actually sell on the platform. That's a lot. Shopify processed $79.5 billion in order values in 2021. Let's look at how many Shopify stores there are. In the United States, 2.5 million stores. And also, as you can see, United Kingdom, Australia, Canada, a lot of these is a much smaller amount. You can see a lot of future growth in other countries. Now let's also look at Shopify gross merchandise volume. It pretty much shows that any particular good that was kind of sold using that particular platform, the amount of volume of cash or the items that people end up buying, some key statistics. And as you can see, the actual numbers, 2017, 26, 2018, 41, 2019, 61, 2020, 119 billion. And for 2021, we've seen 79.5 billion. But remember, it's 4 quarters. So this is just 2. So even if we did 2, that'd be like, we could say potentially we could be expecting, let's say 160, maybe a little bit lower than that. Now, how many people buy from Shopify store? As you can see, the numbers are increasing nicely. Now, let's see the actual amount from 2017, 163 million, 2018, 216 million, 2019, 300 million, and 2020, we've seen 457 million buyers. So we can see this is a platform that's actually growing rapidly. Now, as far as the revenue, I'm going to get into this a little bit later, but I'm going to briefly go over it. So from 2018, 1 billion. From 2019, we've seen 1.58 billion. From 2020, we've seen 2.93 billion. And from 2021, we've seen 2.1 billion. Further. So as we can see, 73.3 of the overall shopper revenue is generated from sellers in the United States or North America. And let's see, as far as the e-commerce, how many people buy from the Shopify store, just looking at online retail. Of course, we have Amazon dominating the market. But as you can see, Shopify is right. Shopify is right under Amazon. So most of the sales from online sales come from Amazon, and then Shopify is next. So they're beating Walmart and eBay and Apple. Now, as you can see, for Amazon, 39% of all e-commerce sales come from Amazon, but Shopify, 8.6. And I definitely think that Shopify can increase that number. They're beating Walmart, they're beating Apple, and they're also beating eBay. So to me, there's a lot of potential growth that they particularly have because it's 8.6. So they definitely can, I think, increase the amount of e-commerce sales. Now let's hop into Yahoo and look at their financials. I'm going to scroll down on this side just to look at it, allow you to quickly see it. So if we can see from 2017, as far as Shopify earnings, they've actually been losing money. 2020 is the first year where they've been gaining money. As you can see, their revenue has been increasing. 2017, they lost about $40 million. 2018, they lost $64 million. So you can see they're losing more money. 2019, $124 million lost. But 2020, we definitely seen an increase from the pandemic, $319 million. Now let's look at revenue. Revenue has increased from 673 to 1 billion to 1.5 billion. And the revenue in 2020 is 2.93 billion. Look at it, quarter 2, that's when they beat estimates substantially. And then quarter 3, we've seen that they missed it. And, of course, the stock price really had a fit from that and, slowing growth. And then quarter 4, they actually beat it slightly. Now, let's go over what some of the risk factors is. I just jotted a few down. One of the earnings are forecast to decline. As far as the risk factors, you do have high competition. They do use Google Cloud to store their information. So if something was to happen to that, it would definitely impact the business. Any type of security thing being hacked, it could definitely mess that up. And also, we've seen potentially slower growth. Also, international relations. Their growth also depends on a lot of third parties because they have like multiple apps. They do a lot of partnerships. Yeah, but I just wanted to go over some brief risk factors. Now, as you can see for their competitors, I jumped back to this one, but of course we have Amazon, Walmart, eBay, Apple. Also, you want to keep in mind of particularly things like Pinterest, any platform that allows you to buy things online, that will be their competition. They also have what they call the other websites as far as that let you host like as far as Wix, BigCommerce, GoDaddy. So any particular platform that allows you to create a site and potentially sell products, that would be their competition. Simply Wall Street, this is where I'm going to get a lot of information to break down the stock analysis. So as we can see, as far as competition, they have GoDaddy, Wix, Squarespace, that's another one, and BigCommerce. So these are platforms that allows people to set up websites and grow their business, whether it's products and services like that. But I also wanted to show the other competition as far as the big parties, as far as actually selling online products at a high value. But from the past, let's just say 5 years, we've seen that huge increase. I'm just going to let you know it went up about 1,000%. But lately, we've seen a major decline. It went from 1,628 to all the way, and this is not even updated. It's about I think it was like 790, 780 the last time we seen it. You can see as far as PE ratios and price to sales, a lot of times people can assess the value of the company based off of their earnings and based off of their sales. Now, because this is a growth stock, the PE ratio would be a little bit higher. So as far as bargains, you would like to see that lower, but with growth, just know it's going to be higher. If you want to know more about it, I did a video on different types of metrics that you can use to value a company. Just make sure you check the suggested video. So we had a 32 PE. For someone with high growth, that could be attractive, but going forward, their earnings is expected to decline. So this can be a little bit misleading. And let me show you. So the PE, well, right now it's about 27, but let's look at the forward PE. As we can see, the forward PE is at 163. That's really high because going forward, they're investing a lot more money and spending a lot on CapEx, capital expenditures to run the business, to try to grow it, and investments and stuff like that. As we see, the price to sales as far as revenue is decreasing. So that's good to see. But just to kind of let you guys know that if this number was decreasing over time, that would be good. But just going forward, their earnings is expected to decline a little bit because they're trying to focus a lot on growing their revenue and then eventually focus on earnings. Just look at one aspect and you have to kind of look at the bigger picture. Now, as we can see, this is kind of the breakdown. 4.2 revenue and earnings 3.4. They had other expenses. This is a little bit a lot going on, so I'm not going to go exactly what happened here, but they will end up decreasing it. But in this one, it's kind of a very unique situation. So the net profit margin, that's really high, 81%. Gross profit margin is 54%. So you like to see a company that has high margins. Now let's look at from a evaluation perspective. So as we can see, the stock price is a little bit overvalued, but this was at price 889. So the fair value is 834. So it's actually 729. So it probably will be maybe 10 to 15 below the average fair value, 834. But you have to remember the stock price now is $729. So it would be considered below fair value based off of the discounted cash flows. But keep in mind, discounted cash flows is not would not be necessarily consistent. So this is the discounted cash flow. So this allows you to see the company's value based off of that future cash flow. I will like to let you know that with growth companies, future cash flow can be very hard to predict simply because the company was growing at a fast rate before, but that doesn't translate in the future. So you have to take this with a grain of salt. But if we did see this go into the undervalued territory, that from a value perspective, that could make it very attractive. So if we see the price drops in this particular area at the price drop, then I probably will be buying a lot more simply because I like the business. At this point, it's just about price to me because I'm looking at the upside and downside. You can see we already went over that. As we can see, the ratio compared to the industry and companies is about the same. So they're about the same, but this next year Shopify will be much higher to the competitors. As far as earnings growth, earnings is expected to decline. That's why you're seeing a negative right there. Now, this is the big thing. So their earnings in the next 1 to 3 years is expected to decline 12% on average year over year. So that's not necessarily a good thing. But if we look at free cash flow free cash flow is expected to steadily increase as well. As we also see, revenue is in the blue, so we see revenue increasing nicely. Now let's also, as we can see, they're investing a lot of money, so the earnings is expected to decline by 12%, but the revenue is expected to grow annually on average for the next 1 to 3 years about 25%. In 1 year, their earnings growth was 1,000%. It probably could be a lot because they were losing money and then they gained money, but this is definitely, that 1,000% is not sustainable. And for the past 5 years, we've seen as far as earnings increase of 88%. Let's look at for example, the financial health. So as far as the financials, I'm definitely good with that. As far as short-term and long-term assets, cover short-term and long-term liabilities. So from a financial health perspective, I'm not worried about them financial at all. Now let's look at, as far as the debt, they have very little debt, a lot of equity, and look at that, they have a lot of cash. So this company, as far as financials, is set and ready to go. So their financials look pretty well. Also, I like to see as far as management, they have experienced management. That's also good to see. As we've seen lately, we've seen a lot of inside selling. So maybe from a short-term perspective, you want to keep in mind if you were kind of expecting to hold it for a shorter period of time. But if you have looking at it from a long-term perspective, I wouldn't focus too much on that. It's a lot of the holdings. So institutions own 65%, general public owns 28%, and insiders own 6.4%. So I like to look at this to see who has the biggest impact as far as moving the stock price. And as we can see, institutions have 65%. So if institutions change their mind, you'll definitely see a decline. General public has some input as well, but a lot of times, if general public will probably follow institution because they really kind of control most of the shares. Okay, so now let's just look at the technical part. Let's look at the technical part, looking at price action. I'm not so much as a trader, but I'm trying to incorporate it in my videos. Price action matters. We have a lot of traders out there, especially option traders and stuff like that. So sometimes I look at the technical aspect to see, from a price perspective, where the price has dropped and held and when it hasn't. So it kind of just gives me particularly just a general idea. Okay, so this is what I drew, and like I said, I don't really draw too much for the technical perspective because I'm also a long-term investor. This was a major support level. It dropped below there, so that's not really good. These were some places where the stock has gotten some resistance right here. So from this point, let's say I believe 2020 has some resistance in this point. So if you was looking at a short term, you might have try to buy a 730, and then maybe when it goes above that moving average or something like that, probably maybe sell about maybe 1,000 mark. Or it was on an upward trend, but then it definitely fell downhill. So as we can see, it definitely broke lower than that support, about to go below the 200-day moving average. See bad news. If we hear a lot more bad news or anything like that, we can see this thing can kind of like really free fall. So I just wanted to let you know from a technical perspective, it's definitely on a downward trend. But also, let's look at forecasts of what other analysts and stuff were thinking. A lot of analysts are actually optimistic about it as far as within the next 12 months. Some people say it can get as high as $2,000, as low as $900, and the average is $1,407. So this site is kind of really bullish. If you would kind of like look at other ones where they think it's a buy and sell, I would focus on more so of the reasons why they think it's a buy or sell, and just kind of use an overall consensus. Maybe get down a piece of paper and write down the pros and cons, kind of decide from there. So don't take these blindly. And whether I think Shopify is a buy, I definitely think Shopify is still overvalued. Because I really like the company, I'll buy a small amount. I do understand from the fundamental perspective, the stock price is still a lot higher. If we was looking at it from a business perspective, if the price to sales was much lower, maybe like 10 or 8 or something like that, it would definitely be more attractive from a business perspective. But right now, it's still not a bargain for me. But I've noticed a lot of times with great companies, stock price may not get to where you would like to see it, as we've seen Amazon and stuff like that. So sometimes when I see great companies, I see a strong pullback in the stock price, I just buy a small amount. Like, it could drop more, but once we get into undervalued territory, and each time you've seen a major dip, I'll keep buying a small amount because I'm a long-term investor. And I also know that this company evaluation is still pretty high. But like I said, as a long-term investor, I'm looking at the upside and downside. Now, if it goes up substantially in a short period of time because of the high valuations, I probably will sell off a little bit. But yeah, so that's what I think. That's my personal insight of whether I think Shopify is a buy or whether you should buy the dip. So if you buy the dip, just be careful. But that concludes our stock talk. Let me know in the comments below, what do you think about Shopify? And if you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to my channel.